Welcome to the MFP Quarterly Update. My name is Adriaan Combrink, Junior Client Portfolio Manager at Equilibrium. Today, we'll take a closer look at the MFP local and global portfolio performances and the key economic and market drivers behind this quarter's returns. This cartoon perfectly captures what investors have felt like lately. One day, the headlines point toward conflict. The next, they hint at negotiations. And the markets swing between panic and optimism before most of us have finished our morning coffee. It sometimes feels like investors need a direct line to policymakers, central banks, and a few fortune tellers just to keep up. Yet, uncertainty is not new. History shows that markets have consistently rewarded disciplined investors who can look beyond the noise. Financial markets remained resilient in Q2 of 2026. Bouncing back after a volatile start caused by Middle East tensions and concerns about energy supplies. Technology stocks led the recovery as investor confidence in AI and AI-related spending continued. Inflation remained higher than expected, leading central banks to take a cautious approach to changes in interest rates. Local cash continued to provide stable returns, gaining 1.7% for the quarter. SA listed property and SA bonds performed strongly, returning 10.5% and 7.9% respectively, as falling yields and improving sentiment supported these two asset classes. South African equities struggled during the quarter, declining 2.4% as weakness in the resources sector outweighed the gains in the financial and industrial sector as seen in the chart. The rand strengthened by 4.2% against the US dollar during the quarter. While positive for local currency, it reduced returns from offshore assets when converted back into rand. Global developed markets gained 8.9% during the quarter, with the S&P 500 gaining 15% in dollar terms on the back of strong corporate earnings. Emerging markets delivered even stronger returns, up 32%. Led by Korea and Taiwan as demand for technology and semiconductor companies remained robust. While global bonds delivered a modest 0.7% in dollar terms, the stronger rand reduced returns to negative 3.7% when measured in rands. Global bonds was the weakest performing major asset class in Q2. Global listed property gained 4.3% in rand terms during the quarter, supported by improving investor sentiment and stronger equity markets. Now let's review the performance of the MFP focus range during the second quarter. Despite continued market volatility, our positioning delivered strong outcomes, particularly in the multi-asset focus 3, 5 and 7 portfolios, while long-term performance remained highly competitive. From a tactical asset allocation perspective, our overweight position in local equities detracted slightly due to weakness in the resources sector. However, this was more than offset by our overweight allocation to local bonds and our underweight position in global bonds and cash, both of which benefited performance as the stronger rand reduced returns from offshore assets. For the quarter, the MFP Focus 3, 5 and 7 model portfolios returned 4.9%, 4.7% and 4.4% respectively. The Momentum Focus Fund of Funds delivered returns of 4.6% for the Focus 3 and 3.9% for both the Focus 5 and 7. Over 1 year, both the model portfolios and the fund of funds continue to outperform their benchmarks and peer groups. The Focus 3, 5 and 7 model portfolios returned 12.9%, 14.8% and 14.6%, while the fund of funds delivered between a range of 15.5% and 15.9%. Longer-term performances remain strong, with all the focus solutions ahead of their objectives, benchmarks and peer groups since launch. Our newer solutions also performed well. The unconstrained equity portfolio gained 4.2% during the quarter, outperforming its benchmark, supported by its overweight in exposure to emerging markets. The Focus 7 tax-free portfolio returned 4.8%, outperforming its benchmark and peer group over the quarter. Our recently launched hedge fund solutions delivered slightly negative returns, with the stable and the growth portfolios down 0.2 and 0.6% respectively. While still early in their life cycle, they remain valuable long-term diversifiers within clients' portfolios. Now let's take a closer look at our global managed solutions. All three Momentum global portfolios delivered strong returns and comfortably outperformed their targets during the quarter. The cautious, managed, and growth portfolios returned 4.8, 9.9, and 15.3% respectively in dollar terms. An underweight position in equities weighted on relative performance, although overweight allocations to specialist assets and higher yield bonds added value. A key contributor was the Momentum Global Equity Fund, which returned 14.9% and outperformed the MSCI World Index by 1.1%. During the quarter, portfolios added a small allocation to a defensive ETF and later reduced equity exposures by 2.5% to 4%, reallocating capital towards short-term credit, convertible bonds, and emerging market debt, where valuations and fundamentals were viewed as much more attractive. An overall fixed income allocation was increased, with a focus on high-carrying sectors including high-yield credit and emerging market debt, reflecting a shift in the relative attractiveness of corporate bonds versus equities. Thank you for your time, and please join us for our upcoming Outcome Matters session, where we will discuss market environments and our solutions in more detail.